Having a great Wednesday today. We're going to be having some huge transitions in the market coming up, and I want to be talking about all the different market structures, the different setups, the different breakout points, the resistance points. So I'm going to actually start from the beginning, you guys. I'm going to actually just knock everything out. I'm going to set everything to the downside right here. I'm going to actually remove all these drawings because I was actually doing this with a client yesterday. So I'm going to remove all these drawings. I'm going to actually start with you guys from the start. So really excited to be on today, guys. I hope everybody's enjoying the market, enjoying these really lucrative times. I've had a couple trades in the Discord. We had a euro trade that went to profit yesterday, a great bit of pound that I took a little bit of profit off the top because we look like we're going to look to a bounce to the upside. As you can see, I'm going to go through all these pairs, you guys, so just bear with me. It's going to be a really awesome live stream today. I'm going to be teaching you guys a lot of other stuff that I've been working on in the back end of the quantum world behind us. So I'm going to just give me a little bit of time, and I'm going to get it all set up for you guys. And I have the comments up and running, you guys. I got a new modem in my house, so the internet is super fast again. So we shouldn't have any problems from this forward. If you guys have any comments, I should be able to see them. And you shouldn't have any latency, no more lagging issues or anything like that. I made sure this last weekend to take care of that because that was definitely affecting with me and just my integrity with my live stream. So I'm super excited to be on and super excited to give you guys some knowledge. So we're going to go straight into it. We're going to go to the US dollar. We're going to go to the US dollar Japanese yen first, and we're going to go from there. So as we can see, you guys, we had, if you guys didn't see this, is that I pre-predicted the market on the US dollar short. This short I pre-predicted actually in July. So this was a huge thing where a lot of people were like, I got actually a lot of so-called credit from a lot of people because I predicted this trend that was going to break out July. I had an analysis actually available if you guys want to see it. I would actually have to, I'll show it you guys next week. Basically, I had an analysis in July around my birthday that I knew that the market was going to shift from these highs right here, and they're going to short to the downside. Basically, I have a whole analysis on that. If you guys want to see that analysis, it's pretty self-explanatory, and it has the dates when I predicted the market and all that other stuff. So it's not really that, it doesn't really matter. Obviously, the market happened. As long as we made money on it, we made money. But so I just want to show you guys these distribution factors and how the market works. So the market likes to work in 100. So let me actually get onto my Gmail, and I'll be able to access all this stuff. Actually, no, because I can't do that right now. Okay, so I'll actually do this, you guys. So I'm going to show you guys how this works. So price is basically runs in 1,000 pip intervals, okay? So these 1,000 pip intervals are essentially market range of price, and the market likes to run in between 1,000 pip range and 250 pip intervals. So I'm going to map out the 250 pip intervals as well as I'm doing the 1,000. So just bear with me, and I'm going to show you guys exactly what I mean. So this is, oh, wrong one. Let me just remove that. Really sweet. Okay, cool. So we can see right here that this is October, right? So we had a high here, which is basically the 4th month before October, November, December. So the 3rd month before the end of the year, right? So they were running price basically all year, right? So from April, like last year, right? March is where April is where the breakout is, because that's where April is where the trend happens usually, right? So April is here. So we're at basically 106, right, in April there. So as you guys can see, previous structure leaves clues. So now we're at 110. So what possibly are we going to see to the downside? We're probably going to see it retouch what 106 again. Why, you guys? It's because market price loves to shoot a spike to the downside, consolidate price, induce buyers, and then once they get enough liquidity, they will then trap the buyers and move price back down to previous structure lows. They do it over and over and over and over and over and over and over again, right? So what we're going to see now is that price is definitely looking like a shoot up, right? So what do they do here? Consolidate price all year, building liquidity. So what market makers do, you guys, is that, so we're going to go to Citadel, right? So Citadel Investments, right? Citadel is the biggest liquidity provider of securities basically in the world. One of the biggest in the world, right? So they are actually one of the highest, or they are one of the biggest liquidity providers in the world in the ECB markets, right? They are been known. They're one of the largest market maker firms with more than 15 years of experience providing liquidity in global fixed income, currency, commodity markets, right? So we can find that the transitional aspect comes from a lot of these liquidity providers because these are the people that are running the market, right? We have what's called commodities and futures, right? Futures trades, and we have these swaps. And these swaps are basically when big institutions, like, they can hold a trade for like 3 months, right? And this every 3 months they're basically going to be able to extract the funds that they want to from basically closing a contract with another bank. So, like, for instance, say that HSBC wants to buy gold at 103.25, right? And we have a huge gold mining factory that's wanting to sell it at that, but price needs to go to that area, right? So what they're going to do is that they're going to manipulate price, induce a response, but move in the direction as where they want to, and then they'll exchange the rate. So they'll shift the rate. Watch, I'll show you guys what it means. So we're going to go with foreign exchange. So how do we do it? Risk warehousing model, the focus of internationalization that works to minimize market impact to clients. State-of-art risk management provides reliable liquidity. Advanced technology allows to deliver customer feeds based on clients' needs. Local pricing positions around the world to deliver timely access to price data and high levels of customer service. Okay, sounds pretty straightforward, right? They're a liquidity provider, one of the biggest in the world. Understand? So let's see what they mean. So they're saying Citadel Securities is one of the largest market firms with more than 15 years of experience. You got to get a clients benefit from our singular focus on providing best class liquidity, tight spreads, firms, and large sizes consistently. We all know, you guys, that this is market. What they do, you guys, is that the market is based off a casino structure, right? Every casino has a book, right? Just like every market maker has a book. They have a book that they have abide by, right? They have basically liquidity and funds that they're able to extract and increase and implement and decrease throughout the year. And then they use these to be able to make much money, right? They're using their money to make more money. It's basically the law of resonance, right? So they're using and creating a magnetized field of a quantum level of money to be able to magnetize buyers or sellers into the market. And then once they have increased the amount of buyers and sellers, they extract the money and put it back onto their books and provide with a profit. So for instance, price essentially goes like this. So we can see that price was liquidity. The liquidity trap was down in February. Where February price was definitely in a certain area, an aspect, where it was down in April, right, of last year. So this is when the trend started. We had the trend, we had this channel for about 1,000 pips, right? So we had 1,000 pip long reversal. So we just had basically a bullish US dollar year, right? Everything was high. We had high stock prices, home sales, we had low unemployment. All these factors were taken into consideration. I mean, we were doing everything right. So this is what happens if you have a deficit in the economy, though. A deficit in the economy means that we are increasing too much. I would say not a stigma, but we're increasing when we don't have enough money to. We're basically using too much power, right? When we don't have enough reserves. Essentially, what happens is that when the deficit is basically comes to fruition, we have to rely on our sustainable of our economy. So if our economy is not sustainable, which it's not, we've been just propped up, right, off interest and debt and loans for, I don't know, God knows how long, that when things have to come to light like they always do, it's not going to look pretty for us. It's not going to look pretty at all. Everything's going to shatter because you can't be able to increase an economy and have an economy that sustainable with all these inflated debts and all these increasing loans and these interests and all these banks and institutions taking out money that they don't even know if they can pay back. But on paper, it looks good. Excuse me. So on paper, it looks good. But in all actuality, it's not good. It's not okay because the average middleman is the one that's going to get hurt. So people that actually pay their taxes and the actual ones that have 401ks or IRAs or whatever, and the ones that actually basically are the machine of the economy, which is the middle class. So what happens is that, and speculation investors, right? Most speculation investors, you know, usually you have speculation investors between the 200 and 800,000 range of yearly income, but you do have those traders that want to, you know, just try to get into the markets and see if they can make some money, which is okay, with obviously risk management and knowing and understanding. So what happens to you guys is that price traps all these levels because they know when they're going to dump. They know, they have it's an algorithm, you guys. It's a mathematical formula, right? Just like they said. It's technology, you guys. Technology. They use technology, right? It's an algorithm, right? Just like it's a quantitative trading algorithm. Basically, it runs off pre-market structures, market psychology, human psychology in determining market cycles. This is how the market is able to do what it does. So what happens is that the market runs in these certain areas for a certain amount of time. It could be a month, could be a year, could be 3 years, could be 5 years. They know and can considerably know with rates, percentages, data, inflation. They calculate that all into a persistent measurement. And then after they calculate it, then they'll be able to spit out a formula of knowing where they're going to be able to possibly make it the most profit. So what these market makers do, these liquidity providers, is that they will give you funds. They will trap your liquidity for many times. So obviously we had, right? And I'll show you guys what I mean by this. So obviously, guys, you see the bigger picture, right? But I'm going to show you guys how this works. So you guys see how it took. So we're going to go to the dates. So you guys see how it took basically all year for the market to hit this high. Basically 240 days, 365 days of the year. And then at approximately half the time, you guys, they drop price and take out all the stops. This is what I'm talking about, the algorithm. This is what I'm talking about, the market manipulation, the market structure. It's all based off a quantitative algorithm. The reason why I'm telling you guys about these 1,000 pip intervals, these 250 pip intervals, these psychological levels, right? The market highs bounces off the high and the low of the day, the high and low of the week, high and low of the month, retest previous highs, retest previous lows, because excuse me, this is how they make their money. This is how they make their profit, usually. So I'm just gonna get a little bit of water, you guys. Okay. So knowing that, we're able to make a defined strategy, right? An edge that will be able to be compatible so we can make profit hand over fist. Once we know how the fisherman likes to throw his rod into the water, then we know where the bait's going to be, so we know where the fish is going to be at. So basically, all we're seeing, because look at you guys, look at. So we can look back till 2017, right? I put this 1,000 pip interval, and besides this right here, which is like another 250 pips probably. Oops, let me get that right. So, which is like another 250 pips. Price is basically consolidating within this full 3 years, right? Or full 2 years, excuse me. So now that we have a range, which is the average daily range, now we have a secured structure range, which is the interval range, which is basically the zone range that the market likes to play off, which is 1,000 pips. So now we look at it from a tinier perspective, okay? So we go to 500. So now we're going to shift the market zone and see where 500 takes us. So let me just come back here. Hopefully this is helping you guys. So we're going to go to 500 now. So 500 will be right. I have to shift this down actually a little bit. So 500, if we look at 500, I'm going to go to the daily chart. We see that how perfect is that fitting at this area, right? 500 pips is essentially where all of this liquidity is being trapped in for basically April 17th through December 17th, which is basically that full year. So we're trading in between a 500 interval. So If we were to able to know that, then we can just buy and sell at the previous high and lows at these structures without having to use indicators and all these Gartley patterns and cipher patterns and moving average crossovers and Ichimoku strategies and parabolic SCRs and all these other indicators that everybody has studied. You know, at least I've studied massive time on these indicators, which never really made me money. Always, you know, made me money in the interim, and then I lost it a month later. You know, it never really satisfied me. I never really was satisfied by all these indicators. What made me start making a lot of money was using the intervals, using price structure, knowing where the market makers are heading. How do psychological numbers play about this? How does the market like to work off, right? They make a high, they make a low. They work off that low, they work off the high. They work back off the low, they hit a psychological level, which we talked about in our previous videos. If you guys are new to them, you can go back. Then they work off the high again. Then they work off the low, and then they consolidate before they shift the zone. And they do that all the time, right? Once again, make a high, make a low, work off the high, work off the low, work off the high, work off the low, consolidate, shift the zone. Consolidate, shift price into another zone, then now do it again, right? So we can look back at price, and price will just show over and over and over and over again, right? Unless you're in a trend. If you're in a trend, then obviously you got higher lows and lower highs, right? That's basically, the market is 50-50. It trends 50% of the time, and it's consolidating 50% of the time. So we'll go again. Market makes a peak formation high. We put that barrier, right, at that psychological level. We work off price. Price consolidates, shift the zone, traps the buyers, consolidate, shift the zone, consolidates price, shifts the zone, consolidate, shift the zones, stop punt, trap buyers, hit stop losses. And then once they hit your stop losses and they moved liquidity enough, but not enough to take home because there's profit orders being taken here. They're not going to move that low. Then they'll consolidate once again, shift price, and then do it once again. And then they'll do it over and over and over and over again. So consolidate, shift the zone, consolidate price again. Now look what they did. They just shift the zone, consolidate, and then now another shift to the downside. To retest, guess what? Market low. So that's where we know that price is going to go back to the downside throughout this next couple months, right? So we know price is definitely going to be moving to the downside. So good to see you too, Justin. Great to be here. Sorry that it's a little early over there for you, because I know I'm actually a little on here a little longer. But hey, Michael, good to see you as well, you guys. So but I'm gonna list you how I have made more profit traded than naked charts and working off the highs and lows to more indicators can become confusing and makes me second. Exactly, Justin, you're super right, man. Yeah. So completely. You don't need them. I don't even use any indicators really anymore. Okay, like I have the 200 moving average, you guys, and I use this thing on my Hugo Way account where it's a QMP filter. It's really simple stuff. I'll show you my next video of it, and I'll show you my platform on my trading platform, and I'll show you guys just how it is, you know, and you know, it's 500 to 1 on the Hugo Way. You know what I'm saying? Like, you know, I know that I've been a little busy, you guys, these last couple of weeks, but I've been really gone for about a month and a half, but I've been kind of doing a spiritual cleanse, and not just that. I've been, you know, I did really successful in the stock market earlier this year, January and February. I did really well, so I wanted to take some time off and to, you know, money's not everything in life, man. You gotta also, you know, enjoy yourself and have that. I mean, for me, it's more of a spiritual cleanse than anything, because, you know, always having, you know, up all the time and, you know, pushing your body to the limit mentally, it's really wear and tear. So you gotta have that polarity in life. If you don't, then you're gonna crash and burn. So so when I get back into the markets, you know, it's like anything else in life. You know, you have to go back into structure. You have to go back into it. You know, you don't just hop back into it and you start making big money out of nowhere. You have to flow back into the methods. Your synapses and your neurons will then reactivate and recontribute and calibrate back to the measurements that it was beforehand, right? Just like a basketball player, right? If he doesn't play basketball for like a month, you know, he's probably going to be shooting at the gym if he's been playing for 10 years, but you know what I'm saying? But it takes time. Just that's all I'm trying to say. So that's all I was the reason I was a little early with the trades that I took. The last couple trades have been a little bad on the Discord, but I'm gonna make that up with these next couple of trades in the positions. But you guys know that it's pretty self-explanatory. We're looking like a USD JPY short. We made an M formation at the top. We all know about the M formations. If you guys got the Market Maker's Handbook, we saw that M formation right here. We might see a retest to the high one more time before we see a downward spike. It can happen. I don't not see it happen. So we're gonna go into the Great Britain Pound, you guys, and I'm gonna show you guys what I possibly see with the Great Britain Pound. So I'm definitely looking for a market stop hunt before I see a breakout to any side of any market. So I want to see that breakout seeing during the stop hunt during that new moon or that full moon coming up soon. So what I can possibly see is that market price is definitely looking to break to the upside. Liquidity has definitely been shift in this zone for a while, you guys, for a minute. So price wants to break out of this area very much so. So we might see induce a short sell off right here, and then after that we could see a bullish breakout. But we possibly might just see a downwards fall as well, but we'll know more. But since the dollar is definitely showing a lot more downwards momentum, we can see that, you know, when the euro is going long, dollar is usually short. Really, they're very like cross paired. So when we see these, I can definitely see that market price is showing a break off for euro pairs in general. So we can see that there's that range right here. We see that market price is kind of making that ascending triangle. If you guys go by those textbook break, I don't use these really ever, but you know, you could use these ascending and descending triangle and wedge pattern. I use wedge patterns only for non-farm payroll false breakouts, but I'll show you guys how that works next time false non-farm payroll comes out. But you know, this is definitely a textbook ascending wedge, right? We got the higher lows, and then now price is starting to consolidate, more pressure's being built, and then a breakout to the upside. So, you know, it's definitely a possibility. It looks really good on paper, and it really looks good because we can see that the shift from previous structure high is definitely not wanting to break. We can see that price is definitely now consolidating at that level. So we could see price definitely move back to the upside for the euro dollar. Their economy is not that great right now, but, you know, as well as euro economy is kind of like the U.S. economy, you know, as we know that they kind of are in synchronicity with each other. I mean, sometimes they're out of sync, but, you know, we all know in 2008, not just our economy, but a lot of economies failed as well because the dollar is king. The dollar is 60% of all central reserves. The dollar is 82.6% of all transactions. Whenever there's not enough dollar base, right, then all other markets fail because they need that other inquiry, they need that other commodity or future to be able to live off, to be able to trade it in the public market. It's just like taking, you know, like taking freaking wheat out of the commodities market, right? How are you gonna take wheat out of the commodities market? Agriculture is the reason why the futures market even exists, right? You can't take a basic, you know, value tool, right, or commodity out of the market that's barely needed. So yeah, it's really important. So are you going to take us on a journey with your small account so we can see you build a large account? Yeah, for sure. So I'll do that. Actually, I'll start doing that on Monday. So I'll actually fund that account and I'll do that on Monday, and then we'll just be able to knock that out. It's actually gonna be really fun. So I'm gonna put probably like $10,000 into a Hugo Way account. And then I'll just be able to trade it with you guys and try to get that to like around 60, 70,000 and, you know, go day by day with it. And I'll just show you guys screenshots and I'll actually just put it on the live stream. So I'll fund that account. I'll make this my word. I'll fund that account this weekend for 10,000, and then you guys will be able to watch me trade it every single, you know, I mean, you guys will probably see all my trades, but I will go live every day so you guys can see every setup that I took, and we'll go over the setups. So then you'll understand, and obviously you guys will be ready to, you know, see how you can make, you know, a $10,000 account turn to $70,000 or $80,000. You know, it's not hard. You can really do that with discipline and hard work. You know, especially with the 500-to-1 leverage. You just got to be very careful with your risk management and your structure. So yeah, so I'm really excited to show you guys that. That will be definitely something really exciting to do. So we'll basically do that for like a full month. So we'll start next week, and I'll just add that onto the Discord as well. So just keep an eye out for that. So moving forward. So yeah, so consolidation here. We can possibly see a breakout to the upside. That is a high possibility. So we can also see that this zone was definitely being in a shift area, or market price has definitely been in a zone here. So also I'm gonna actually add it to my FX book as well, and then I'm gonna also put my FX book. I have it for my clients, client's account, but obviously I can't, give you guys that information. And my account as well, which I can also put onto the Discord as well. So I'm gonna actually put on the small account for you guys, the Hugo Way account. I'll put it into my FX book. I just learned about this app. It's pretty cool. We can like use it as a portfolio, right? And it's verified, so you guys be able to see all the verified transactions and trades. I'll do that. So I'll put that. I'll try to have that set up as well by Tuesday, no later than Wednesday. So you'll have that able, and you'll be able to watch that as well on my FX book. So it's pretty cool. I like it. It's been really helpful, especially when I'm going into meetings and stuff like that, instead of always having to use this other freaking portfolio management company that I really don't like. So yeah, so anyway, so if you guys have any questions at this time, I think I'm going to close it out. We kind of went over all the basics, the structures, we went over the things, and then Monday we'll basically, Monday, I'm just going to say, I promise that I'll be on Monday. Monday we'll just start trading, like seriously, because I haven't traded with you guys. I've been doing more analysis and teaching you guys, and basically getting you guys up to par. But you guys basically know as much as me now. Especially you guys, Justin and Michael, you guys have been on these videos and definitely have soaked up all this knowledge. And you guys have Market Maker's Handbook, so you guys are probably just as good as I am now. So it's so I'm gonna be actually now. I just want to show you guys how this really works, and real cash, real money, real accounts, and I wanted to show you guys how how it works. So I'm super excited about that. We'll get that done, and it's going to be really inspiring for the people that are new to Traders Profit Club, and the ones that haven't, traded or looking to start to trade. I want to show them that it is possible to start, making money and doing this full time if they, after they set aside, some money and have, things that they don't have a lot of obligations, I should say. So yeah, so I'm almost done with the offers, you guys. You guys can't see it right now, but I got the monitor set up here. I also got my second setup and my monitors over there. I'm gonna actually try to do a live stream where y'all be able to see all this stuff as well. I just gotta paint the walls, but it's looking pretty good back here. So it's gonna be really exciting for the new stuff out here. So is Hugo good when transferring profits? But yeah, it's not a problem. It's like 6 days or 5 days, something like that. It's definitely not that big of a deal. Hugo Way is not that hard to transfer funds. I've never had a problem with them. I just started using Hugo Way. I always use forex.com, but 501, you can never beat that. Like, I don't even need to put $50,000 into account anymore. If you have 500 to 1 leverage, like why risk all that money, for a small gain when you could just use 500 to 1 and just take the formations we need. So, you don't need to have a exponential amount of capital when you're trading with Hugo Way. But it's a double-edged sword, you guys know. But if you guys take, the lessons that I taught you guys, use the proprietary Market Maker's Handbook, it's, you can really, really do well. So yeah. So really exciting stuff, you guys. I'll be back on Monday. If you guys have any questions, please feel free to put on the Discord. I'll be trying to do signals for the rest of the week. Tomorrow is Thursday, which will be my last trading day. So I'm going to do analysis for Euro, Great Britain pound, and USJPY to see where market price is going to be going. In probably the next. I don't like to trade our Tokyo session, but as right now, we look like we're definitely going to spike back to the high. For London session breakout to Thursday reversal. So, and definitely we're going to see a short coming on the euro dollar or US dollar Japanese yen. But I'll definitely look over it in the next couple of hours, and I'll get something into you guys later, probably late Sydney session going into London session, because that's when I like to take my positions, because we know we hate drawdown, right? Drawdown sucks for everyone. So we'll keep it as sufficient as possible. And my mom's doing well. She's doing She's doing pretty well. She's actually doing treatment right now in Mexico. So actually, we just got done talking, or I just got done hanging out with my family last weekend. We went to the beach, and it was really good. We really hung out and had a really good time. So she's gonna recover. So thanks, Michael. I really appreciate you looking out and asking about that. That really does warm my heart. So I really appreciate that. So I've used Hugaway for a lot, never had a problem. Yeah, so Justin, you're right. So yeah, Hugaway is pretty cool. And shout out to Naeem. Naeem's a man for that one. I had no idea about this. I had no idea about this broker. I didn't even know it was regulated or if it was because I heard about Trader's Way and I was like, I don't like Trader's Way. That thing's like, I don't know if it's a scam, but definitely I've had a hard time I have heard things, and especially if it's not my client's money has to be with a regulated broker. I mean, legally, I have to have a regulated broker. For my financial management, or else I'd probably lose my license. So yeah, but all right, you guys. So really appreciate everything. Really appreciate you guys being on. So I will be back on Monday. So have a great day, you guys, and have a great rest of your week. And I'll see you guys in the Discord. Bye.